Once that credit builder leaves your credit, you're back at square one. And we're going to give you 200 back in the first 90 days. Those are things you don't want to miss out on. Frozen below zero in hell if you have to get a credit builder. You still don't want self-reporting on your credit because, again, financial institutions are going to see self-lender on your credit and understand that you're not the smartest, but you're taking what you can get. You could do more faster with a trade line as compared to a credit builder. Welcome back. If you're new to the channel, my name is Amber Manaya, and I'm here for all things credit, all things finance, sometimes a little bit of trading. If you haven't subscribed to the channel yet, please do so now. Do not forget to like and comment before you leave, and drop those comments of the gems that you find throughout this video, because again, you never know who that could help when they come across it. Jumping right in, today we're going to talk about why we do not do credit builders. I'm going to explain to you what credit builders are. I'm going to tell you why we don't do them, and I'm going to give you the best alternative, which is actually not even a bad thing. Now, what is a credit builder? A credit builder is when you go on like Credit Karma, they say, hey, we have this credit builder, or let's see, there's Self, there's Kikoff, I've seen Ally, Chime, Cheers. A lot of those payday, like loan you money apps also have credit builders. I'm seeing they're starting to like merge everything, and then they're coming out with a credit card too, just to confuse people. These little financial institutions are trying to take advantage of who they can take advantage of. Credit builder sounds like a great thing. Real credit building is not done through a credit builder. Real credit building will not come across as sleazy as, hey, we're a credit builder. To the naked, financially uneducated eye, a credit builder sounds like a great thing. And again, I do love Credit Karma, but their credit builder is something I do not partake in, and I would advise no one to partake in. The problem with these credit builders is when big lenders see a credit builder on your credit, they can tell you've had some issues and you're not fully financially as educated as you should be. So it almost looks like a negative. It is going to help you build credit, but it's also going to look like a negative. It's going to look like, okay, this person doesn't really know a whole lot about their credit in general. We could give them high interest rate. They probably won't even question the interest rate. We can rob this person. Don't get me wrong. I have used Self maybe like 15 years ago, before I even understood what a credit builder is. Now let me explain to you what a credit builder is. Credit builder is basically when, it's kind of like the opposite of a CD, which is a certificate of deposit. So with a CD, what you do is you go to your financial institution, you give them a lump sum of your money, they hold it for 6, 12, 24, however many months, and at the end of it, they give you your money back with interest. So now you've made money, and you cannot touch that money until it is mature. If you touch that money before it is mature, they're going to dock you and take a fee. So it's kind of like, oops, well, you just lost the money you thought you were going to make. Now, a credit builder, on the other hand, and on the flip side, is basically when you open up this account with the company, you pay them in installments. Every month you give them, say you have a 12-month, and it's $1,200 that they're going to report on your credit for you. Every month you're going to give them $100. And at the end of it all, after the 12 months, they're going to take their fee out of it. So with a CD, you get interest. With a credit builder, you pay them to have this. The problem with credit builder is you do not get access to the money to use. With a CD, you don't either, but you're still going to get all your money back. It's going to report right away on your credit. You have this $1,200 installment, and every single month, it's going to get a little bit older, of course, right? The problem is when you pay it off, now it is coming off your credit. So say it was supposed to be 12 months old. At the end of that 12 months, it erases off your credit because you've closed it. You've paid it off. Now you're paying a fee. You didn't even get to use the money. Credit builders are basically installment loans like a car, a mortgage, a personal loan. If you need that on your credit, it would be better to go and put a car on your credit. Go put a personal loan on your credit. But you're probably using the credit builder because you don't have the credit to do those things. You can also compare a credit builder to a trade line. The problem with the credit builder is your building history from the day you open the credit builder is not going to have the highest amount unless you choose the highest amount. But if you were to just go by a trade line that had 10 years of history, that had $20,000 worth of credit line, you could do more faster with a trade line as compared to a credit builder. And this is where a secured credit card comes in. Before I explain what a secured card is, some of these credit builders are now coming out with secured cards. which is fine, but at the same time, you still don't want self-reporting on your credit because, again, financial institutions are going to see self-lender on your credit and understand that you're not the smartest, but you're taking what you can get. So the difference between a secured card and a credit builder, which are both just as easy to get. With a secured credit card, you basically take about a $200, between like usually $200 and $5,000. You give your bank or your financial institution, your credit union, you give them this deposit of $200. Then they go ahead and put it on a credit card for you. You're going to use this like a regular credit card. You're going to pay off every month what you spend. And in 6 to 12 months, if you do right by it, you have no late payments. They're going to give you your money back, and then they're going to make that card unsecured, meaning now it's their money. To start a secured card, it's basically you securing it with your own money. Once you've passed their test, aka show your responsibility on that credit card, now they're going to unsecure it, and now you're going to be using their money. They usually raise your credit limit when this happens, and then they're going to be monitoring you every 6 to 12 months to see, hey, does this person need an increase? Some of them will not do that. The best ones will, like Navy, you go from 200 to 2K to 3,500 to, it just keeps going up. But some, like Capital One, you'll open it with 200, you'll stay at 200. And then you really don't grow unless maybe you ask them for an increase. I had someone ask Capital One for an increase, had a $5,000 card for years, did perfect with it, and the only thing they were offered was a $500 increase. That is a small increase, especially when you have to ask for it. But Capital One has been known to be cheap. I am hearing they're loosening it up lately, but they've been known to be cheap. So with a secured card, you are building history. As soon as this card becomes unsecured, they never knew it was a secured card. So there's no red flag there. Now you've built history with it from day one. It's going to stay on your credit because credit cards are revolving. It does not close unless you close it. You do not want to close this. As well, your limits are getting higher and higher and higher. You've gotten your money back, which means you've paid nothing to it. As well, most credit cards, even secured cards, are going to give you cash back. With the credit builder, you're not getting any cash back. You're basically borrowing them saying, hey, this person is paying us on time every month. You're getting nothing for it and you're paying for it. Secured card, you're putting in a deposit, you're getting it back, you're getting cash back, you're getting history, you're getting increases in credit limits. Secured cards are basically free, especially compared to credit builders. I've seen the craziest things when it comes to credit builders because not only do they look bad on your credit, but people who get credit builders, again, are not as financially savvy as others. And what happens is they get this credit builder, they already have bad habits. I've seen people miss payments on their credit builder. So now they have this chime or they have this ally in collections. Nothing's worse than a collection, but nothing's worse than a credit builder that was supposed to help you build your credit in collections. That lets creditors know, hey, this person didn't even trust themselves. They went and got a credit builder and they still miss payments. I've also seen on one of my clients' profile, Ally. I didn't know what Ally was at first. It was 1 cent. Ally is a credit builder. Somehow they didn't pay 1 cent and went to collections for it, and they had to go through a removal process. Imagine going through months of 1 cent being on your credit and hindering you. 1 cent. Tried to pay the 1 cent. They wouldn't take it. They just wouldn't take it. If you do not have to get a credit builder, please do not. Make sure that your credit is frozen below zero in hell if you have to get a credit builder. My favorite secured cards, I'm going to give you about 4 of them, and I'm going to tell you why you don't want to have too many secured cards. My favorite is Discover because I love the way they report history and give you authorized users. Capital One is perfect for this. I love my Navy. You can go to any of your credit unions. They have great secured cards. As well, Bank of America has a really good one that gives really good perks. Again, all of these cards do give perks, but I did notice Bank of America gives really good perks on their secured card. After you've gotten about 3 secured cards, you're doing right by your credit, they're turning unsecured, 3 to 4 of these. You don't really want to keep getting secured cards because the only issue is you may miss out on those sign-up bonuses. When you just get a secured card and then it turns unsecured, you don't get the same bonuses that you would get if you had the good credit and you signed up and were approved for a regular card. So you're still going to get perks. You're still going to get the cash back on these cards, but you're not going to get those intro balance transfer offers for, 0%, where you pay 0% to transfer a balance and you get 21 months. you're gonna lose that because you came in basically through the back door and just showed up. You didn't go through the orientation of the process, and you didn't get the perks for going through the orientation. And there's nothing more than I love than a credit card that gives me 0% on purchases for 18 months. But again, you probably won't get that. You probably won't get the sign-on bonus of, hey, spend $500 and we're gonna give you $200 back in the first 90 days. Those are things you don't want to miss out on. So after you get your first 3 to 4 secured cards, and again, you may not even need that many. You may only need one. It depends on where your credit is. And this is why I do credit consultations for you guys, because everybody's credit is 100% different. We got to find out where you are and exactly what you need. Once you know you're good on secured cards, stop getting secured cards, go for those actual approvals, and get those sign-on bonuses. The sign-on bonuses help me determine which card I'm going to get next. I hope you learned something from this video. Don't forget to share this with someone who is building credit. You've heard them talk about a credit builder. Send this straight to them. They need to understand you may have that credit builder for now, but you may need to get a secured card, because once that credit builder leaves your credit, you're back at square one. Don't forget to like, comment, subscribe. Catch me in the next video.